And so we try and dig at the why a lot because, ultimately founders that we are partnering with are signing up for decade plus long journeys. And that takes a lot of risk tolerance that most people don't have when you actually get down to it. And so we dig at the why and try and pick at that a variety of different ways.
Welcome to Venture Voices, where we interview emerging managers within the venture ecosystem. I'm Richard Kerby, a partner at Equal Ventures, and today we have the pleasure of having Rishi Taparia from Garuda Ventures. Rishi, welcome.
Glad to be here. Thanks for having me.
Yeah, no, Rishi, I'm really excited for this particular episode because I think you were my very first friend in venture. I think we started our careers
That's right.
on the exact same day.
Venture Besties, baby.
Exactly. I was at IVP, you were at Scale. And so it's a long time coming. This is probably like what? We met in 2010. So
That's right.
We're 13 years late on this podcast.
I know it's a privilege to be here and so excited to chat with you. And obviously we've known each other a long time, and you've been such a great friend and mentor of mine. And so excited to have the conversation.
Yeah, no, I'm looking forward to it as well. And let's just start off with the name. What's the origin story behind the name Garuda?
Yeah, so Garuda has a couple of meanings for us and for me. So the Garuda is a mythological eagle that shows up in Hindu and Buddhist scripture. It's a protector symbol and is the steed of Lord Vishnu. And so it's in service of a higher being, which I thought was very appropriate, and also represents strength, speed, and freedom from fear. All things that I thought were good. And if you can bring that to founders you partner with, fantastic. It's also the eagle in the Indonesian coat of arms. And having grown up in Indonesia, it was a nice callback to remind myself of where I come from, my beginnings, and always remember where you started. And so a little bit of a double meaning, but Garuda Ventures, not affiliated with Garuda Airlines, which is the airline of Indonesia as well.
Awesome context there. And yeah, I think, being able to kind of remove fear from founders is an important trait. Obviously, sometimes it's a good thing, but it shouldn't come from the investor side at least.
That's right. Exactly.
And recently, I think it was maybe like a week or two ago, you guys announced, your $30 million fund one. So congrats on that.
Thank you.
And, I find that, the fund one grueling process for us and everyone I talk to is always just like disastrous and difficult and hard. And so, what were some of the learnings from your fund one fundraising process?
Yeah, look, I think fundraising is never easy, and certainly for a fund one. And so for us, we started raising in October of 2020, and so it was a long time coming, and we're glad to be able to now have closed the fund and have some tremendous LPs that we're so grateful for, give us the opportunity to do what we love. Learnings wise, it's always going to take longer, and you always want to make sure that you have top of funnel there and just building new relationships. I believe venture is a people business. It's a relationship business fundamentally. And so building those relationships over time and recognizing that similarly to how we want to partner with founders and connect dots to make lines, LPs want to do the same thing. And so I think persistence matters, being disciplined in your story and how you execute matters, and being able to show as opposed to tell as much as possible will go a long way. And so for us, it was just about continuing to continue to raise, continuing to invest as we continue the process. And look, the market changed very dramatically. We raised starting October 2020, 2020. October of 2021 and 2022 rolls around. War in the Ukraine starts. Markets continue. Obviously, all of a sudden, fall out from underneath. Inflation is there. Interest rates are going up, and now everyone all of a sudden is risk off. And so raising through that period was tremendously kind of character building, I would say. Not easy by any means, but again, grateful to have gotten through it.
Yeah, that makes sense. It's always a grind, but you guys have made it through, and now you guys can continue to push. And I'm always curious just about the founding GP stories for fun. And so how did you and Arpan come together?
Yeah, so Arpin Punyani, my co-founder and fellow GP at Garuda, he and I met in 2012 at his sister-in-law's wedding. His sister-in-law happens to be one of my best friends from undergrad at Northwestern, a woman Ambika Agarwal. We met freshman year, kind of new student week, and we've been close friends ever since. And so we were in Norman, Oklahoma for her wedding, and Arpin and I got connected. He was in New York at the time as an equity research analyst, a lawyer turned equity research analyst, wanting to break into tech. I was at Matrix Partners at the time, and I, I said, hey, let me help you out, and come out to California and let's just brainstorm different ideas. I made a couple of introductions for him. He did all the work. He ended up moving out to California with his family. And joined Okta super early, and so we've kind of been friends ever since, and on parallel paths. Me on the operator side, after I left venture, and he at Okta building that amazing business from early employee all the way to publicly traded company, and had always talked about working together. And ultimately, after he spent 8 years at Okta, he bought Auth0 back in 2021. I said, okay, maybe it makes sense now to come together formally and take Garuda Ventures full time. And so that's when we said, let's do it, and spent about 6 months kind of kicking around what the strategy was going to be, why us, why now, and again kicked off the race in October of 21.
Nice, nice. And then, how should we think about, how you guys are complementary and how you guys are just different?
Yeah, so for me, I come from a finance background. I started out in banking, like you. We were both analysts on Wall Street in New York during the Great Financial Crisis, which was fascinating times. Moved out to California. I went to on the venture side, so I was at Scale for a couple of years, then got poached over to Matrix Partners, and so spent another 2 years there. And then went the operating route. I was super early employee, kind of business operations strategy guy. Basically, the point at a problem that we have, go fix it person. And so that was my journey over 7.5 years on the operating side. And Arpin was always about go to market. And so he first joined Okta, helped build out their channel partnerships, then put his hand up as they started becoming acquisitive and ran all of their M&A, and then helped stand up their venture practice and their venture arm, CVC, at Okta. And so I think we complement each other very nicely because he, as a lawyer by training, is super, super sharp, brings a lot of the kind of theory, a lot of the intellectual rigor, and I bring a lot of the operational background, the execution. And to have someone, particularly in this market, who's got M&A experience as well and understands what it means to prepare your company. How do you look attractive to buyers? How do you make sure you build those relationships? Is incredibly powerful as well. And so we complement each other very nicely. And he's seen obviously the journey from early stage to IPO. I've been early guy my whole career, and so it's a nice match of the two of us together for founders.
Yeah, no, it's always great to kind of see what the 2 or 3 or 4 GPs bring together and how, you 1 + 1 = 3, not two, effectively in that respect, powers. And I guess switching gears for a second, you mentioned the operating piece there. You and I started venture, literally on the exact same day. You eventually went the operating route and now have returned back to investing. What prompted you to come back to investing full time? I know you were still doing some investing while an operator, but what led you to want to say, hey, let's put the operating hat down for a bit and go full time on the investing side?
Yeah, it was the middle of COVID, and I had just left the second startup I worked for, a company called Legion. Spent 5 years at Point and just over a year at Legion, a year and a bit, and was trying to figure out what I wanted to do next. And candidly, the idea of going back into investing and starting a firm was not at the top of the list. It was always something I thought I'd end up doing, but I thought I'd stay the operating route. And so, as I was, dad to two young kids like you, and figuring out what I wanted to do next, I just started helping founders and supporting founders as I love to do. And Garuda Ventures, we started in 2018 actually as a part-time fund, nights and weekends kind of passion project, a micro vehicle, just under $3 million, where we were investing in founders, 50K, 100K at a time, and so had built up that kind of motion already, again as a almost proof of concept. And one day my wife, my significantly better half, said, look, you love doing this. You love working with founders. You love helping them navigate through their challenges. You love partnering with them. You do it for free. Why not just do that? And that was really the light bulb for me of, okay, yeah, actually, maybe it makes sense now to go back to the investing side. And then the consideration was always, okay, do you go join a firm or do you go build a firm? And having worked at two great platforms in Scale and Matrix, and seen kind of through raising, almost $250 million for the companies that I partner with, kind of the good, the bad, and the ugly adventure, said, all right, actually, maybe it makes sense for us to establish Garuda as a new brand, a new firm, a new franchise here in the Valley and the ecosystem, and bring to bear all of the learnings that we've taken as we've grown companies ourselves to bring to founders at the early stage. And luckily, through some great support of our spouses, which is always critical, we're able to say let's go take the plunge and start the firm. And so ultimately decided, let's go back and do what we love, just hopefully earn the right to do it for a long time.
Yeah, no, that the spousal support is definitely a key feature of being able to kind of be an entrepreneur
Essential,
in any capacity.
Starting anything, you have to do it, and you have, because it's not just about you; it's about your entire family and everybody around you, because they're on their journey with you. And if you don't get that buy-in, it's just going to be tension that you don't want to have to bear while doing the crazy thing of starting something.
Yeah, no, I agree wholeheartedly there. And you mentioned obviously time at both Point and Legion. What are some lessons that you've taken, from as being an operator to the investing side with Garuda?
Yeah, look, I think there's certainly an empathy for the journey and what it means to be a couple of people with an idea trying to bring it into reality. I was employee number 7, the first business hire at Point. I was a kind of sub 20 employee at Legion. And so I've seen the chaos that it is to be at an early stage company and you're trying to figure out everything. There are no systems, there are no tools, there are no processes. Every single time you bring on a new customer, as an example, okay, how do we do that? What's the system that we want to build? How do we scale this? And so I think it's just an understanding of the constant firefighting that I think I bring to bear whenever partnering with founders, and recognizing that sometimes you just have to take a step back and focus on what matters. The the focus is critical because there's so many things you could be spending time doing, and so you know that I think helps me kind of get to the heart of the matter quite quickly when partnering with founders, and evaluating the ideas that they have, them as founders. And I've been blessed to have been worked for and partnered with amazing founders through my career. Osama Badir at Point, Sanish Monkar at Legion, and have invested behind a number of amazing founders that I myself would have gone to work for as well. And so I think those things, and the pattern recognition through working both as an investor in early stage companies and an operator in early stage companies, and now back on the investing side, certainly help guide investment decisions for me and for us.
No, I think investing in folks that you'd want to work for and or with is a great bar to have, and a high bar, which is necessary to succeed here. And you mentioned another point too that I find particularly interesting, which is the focus piece. It's something that I've learned over time. Didn't always think about the importance of it, but as you mentioned, there's a lot of things that a founder and their team can be working on at a given time. But if you can't get the core thing right, and focus on the core thing, you kind of like set yourself for failure at the end of the day.
That's right. It's keep the main thing, right? And so it's sometimes it takes a third party, someone who's not in the day to day, but has enough context to be able to ask the questions, and either through Socratic method or very directly say, look, okay, like I think the focus needs to be here, and having someone in your corner that you trust is essential for that. And so I think that's where, again, just bringing to bear some of the experience, some of the understanding, and being able to frankly describe the feelings that the founders are having back to them, and having them say, oh wow, you're absolutely right, how did you know? It's like, well, I've been there, I've seen it, I know what you're going through. Helps again build that trust, and allows you to then have credibility when you say, hey, I think the focus needs to be here, or my advice would be. Ultimately, the other thing that I've learned from kind of the operating side that I'm now bringing to investing is, I think you and I both experienced investors who believe that they're running the company, or they spend too much time pontificating about things that don't matter, provide ideas that obviously the team has thought through for hours and hours, if not days on end, as if they're novel and unique. It's like, no, okay, let's focus on the important things and recognize that as investors, our job is to guide, to coach, to help to liberate and break through the noise on all of the things that are going on in a day-to-day firefight of an early stage business.
Yeah, no, I think that's exactly correct. And I guess, maybe going to Garuda specifically now, you guys are, primarily B2B investors at the pre-seed and seed stage. Are there particular categories that you want to see, like spending time in, want to see more of within the broader B2B context?
Yeah, for us, we want to invest in and are investing in categories where we have kind of lived experience, earned experience, because frankly, that's where we believe we can be the most supportive, where we have the most, fully formulated hypothesis, thesis, development done, and where we frankly have most of our flow and network. And so for us, it's investing across kind of SaaS, both vertical and horizontal, investing in fintech and kind of commerce infrastructure, investing in security and infrastructure more broadly, and then climate as the fourth bucket. A strong part of that due to our venture partner and co-founder James Richards, who's now CEO of a company called Evergrow in the portfolio, and then his work building out a climate tech company. And so, four core areas that we spend time in and where we invest and spend time with founders. And again, investing up to $1 million, happily the first investor into a company, and again, just trying to partner with amazing founders as they get started on their journeys.
Yeah, and it's great to get a sense of those four core categories for you within the broader B2B context, and maybe continue this kind of like tactical version here. Obviously, pre-seed and seed is your bread and butter. What does that mean to a founder? What's the round sizes that make sense for you, and what's the check that Garuda wants to write into those rounds?
Yeah, generally we're investing kind of call it 2/3 pre-seed, 1/3 seed. And so, the majority of the time we're investing in that first round of financing. So, if you look at the portfolio that we've invested in to date, 15 companies out of this fund so far, we've got typically rounds are between 1.5 million to 2 million at the pre-seed. Seed obviously being bigger, kind of that $3.5 to $5 million raise. Pre-seed rounds, we're coming in with anywhere up to $1 million. Average for us right now is about 650K, and average ownership for us is 8.2%. And so, for us that proceed, we're trying to get that 7 to 10% ownership, with up to $1 million at seed. We're happily a lead at seed and pre-seed rather. And so we've been, a lead or co-lead at pre-seed, and at a seed, generally bigger rounds. We're not as much of a lead or co-lead. We're probably going to be follow a kind of second or third largest check, with again up to $1 million. But those businesses obviously further along, larger round size, more traction. And so that's kind of how we slice up the world.
Yeah, and you mentioned focusing on categories that you have earned the right to invest in, earned the right to be helpful to the founder in. And one of your founders mentioned that Garuda has helped introduce them to customers, new employees to hire. How do you think about actively engaging with companies that you guys invest in, and what can a founder expect in terms of support from Garuda?
Yeah, absolutely. It's something we think about a lot in the kind of our post-investment support, and so for us, we view every founding team as different. Just like I've got my kind of two kids and I have to parent them very differently, despite them having come from the same place. I think every founding team, based on their background, has different needs, and so we try to support founders the way they want to be supported, with a kind of baseline level of things. So, communication first and foremost. We want to earn the rights to be that first call for founders. And so that means constantly being available. And, we set up text threads with every single one of our founding teams. We're on Slack together, obviously email, and just being available for those random middle of the night calls like, hey, I'm kicking around this idea. What do you think? Half baked. And knowing that we'll be there without judgment, with empathy, with an understanding of what you're going through. Again, having been there ourselves is critical. And that's all about building trust. Then it's about, what are you looking for? What do you need? If you are a founding team who comes from the technical engineering side, product side, maybe you need support on go to market. We've got obviously our kind of standard pitch books and playbooks of how do you go about hiring your first AE? How do you think about when is the right time to transition from founder-led sales to bringing on a team? What does the stack need to look like? Things of that sort that we support with. If it's on the more, if you're kind of more go-to-market oriented team and you need technical support, we can obviously offer some feedback and thoughts, but have a deep bench of advisors, mentors, guides, people in our networks that are have actively said we want to help support you and your founders. Put us in that we can then call on to offer that feedback. And so, the Garuda team is light when it comes to people full time working for Garuda, but the bench is very deep thanks to again having got more gray hairs than I'd like to admit, and been around the block for a while, and being able to call on people who've been there and done that, and have, as operators, practitioners, that we can then introduce to our founders as well. But again, it's a very bespoke model that we take to support for our teams, that we try and again roll up our sleeves and get hands on with a baseline level of we want to be there. This is our aspiration to be that first call, and now let's make sure we're doing the right things to get to that level.
Yeah. No, I think it's important to show the founders that there's more than just behind the capital around Garuda and others, because there's lots of capital out there, which
That's right.
I think kind of maybe goes to my next question here, which is around like you guys are B2B focused, early stage, called pre-seed and seed. That's a competitive segment of the venture investing market, and so how does Garuda think about differentiating themselves from the other firms that are going after those same opportunities?
Yeah, I think first and foremost, it comes with this idea of building trust. As a former operator investor, I've seen the good, the bad, and the ugly of venture, and having raised $250 million on behalf of companies I work for, have a deep empathy for the founders. And I think transparency is key, right? And so it's all about making sure that they know what to expect and what they will get from us, how long our processes take. And I think that's the first level to building trust when you're in an active process, is just being transparent about what to expect. And then when passing, not ghosting on a founder, not sending a throwaway 2-line email, not doing a whole bunch of work, taking a whole bunch of time, knowing you're not going to invest, and then investing in a competitor, or not disclosing a competitive investment that you've already made but not announced. I think these are just little things that I've personally experienced that, again, to my point about, okay, let's go build a firm that reflects our values, that we want to make sure we do away with. And so, for us, it's all about give first. And so we try to meet founders or prospective founders even when they are not raising, because then we can kind of start to build that relationship, and offer feedback, insight, thoughts from the market, without any expectation of anything in return. Again, to build that trust, and so at that point, it's about just putting in the extra effort. I think founders appreciate that. Founders know, in a world where capital is a commodity, it's all about working with people that you trust and people that you like. And so it's like, how do we make sure we do that quickly? And so, I've done the overnight trip to New York City to meet a founding team in person and literally give a term sheet, old school style, in real life, hand them a piece of paper and say, this is what I want, and this is, I want to partner with you, and this is why, and then time it such that as soon as they get the term sheet and we leave the meeting, they get inbounded by other founders that we've given information to, in emailing them about why they should work with us. And as a small firm, we've won opportunities to partner against much larger, much more established firms because of that extra efforts. And so I think just like founders, when they're building something, you got to put in the time. Speed is your friend. I think that is something that we try and embody here at Garuda as well.
Yeah, that makes sense there. And maybe just passing the baton off to another topic here. Your life journey has taken you from Canada to Indonesia to various cities in the United States. Has your time abroad, during your youth provided any insights into looking at non-U.S. investments? Do you want to see things outside the U.S.? Just great context to get a sense of like the globalness. Obviously, Garuda has global implications on the name, and so please share more on that as well.
Yeah, look, I think the thing that I probably take away the most from growing up as an expat in Jakarta and having traveled and lived around the world is that great ideas can come from anywhere, and that I think has expanded the mentality that we have in terms of where we're investing. Most of our investments are in the U.S. and will likely be in the U.S. for the coming few years, but certainly we're looking at opportunities in Southeast Asia, obviously in India, in Latin America, in Africa, because again,
Markets work in cycles.
they they are, different regions are a few years to a decade behind here in North America and in California where I sit. And so it's like, how can we catch some of those tailwinds and those market shifts as they're taking place in new geographies? But I think now especially, I think more and more people are recognizing that entrepreneurship is taking place around the world, and opportunities to build companies around the world exist. And so now it's about having a nuanced understanding of the markets, of the geographies, of the regions, and helping the founders think through how they are building, maybe sitting in Indonesia, in Jakarta, or sitting in Sydney, or sitting in Perth, but building for the global ecosystem, how to do that. I mean, in 2012, I met the founders at Canva as they were raising their first round of financing seed when I was at Matrix. And this is a boyfriend, girlfriend out of Perth, Australia, building design software for the cloud. I think it's because of my experience living in Jakarta and as an expat, and having a familiarity with the culture, with the ecosystem, that ultimately led me to have the confidence of like, yeah, let's go invest in this business. Matrix invested as one of the biggest investors at that first round of financing that they raised, and obviously they've gone on to do amazing things since then. And so, that's something that I keep in the back of my mind, is like, okay, yep, check. There's global entrepreneurship is very real, and don't get suckered into looking at the 45 miles between San Francisco and San Jose as the only place that you can invest capital.
Yeah, no, I think global aspirations is super important. As you mentioned, great RDs are created and found anywhere, and that Canvas story is an awesome one. And maybe it would be great to kind of just hear another story, honestly, and maybe more Garuda focused. It'd be great if you could just walk us through a recent investment you guys have made, and what ultimately got you to say yes. Because in our job we obviously say no the overwhelming majority of the time
Yeah,
for many different reasons. And so why did you say yes to this particular investment?
Yeah, so we recently announced our investment in a company called FlexPoint. FlexPoint is building payments and software solutions for MSPs, managed service providers, providing IT and security infrastructure for outsourced to clients, doctors' offices, dentist offices, lawyers, people who don't have internal IT teams. And so, we met the FlexPoint team, great founders, Victor Lopez, Sam Krishner, and Alex Krishner, through investors who had met the founders and introduced them to us, and immediately were struck by a sense of inevitability. It's hard to quantify, which is, I think, the frustrating part. But to the concept we talked about earlier about pattern matching, it's like you just feel these people are going to do something major, and a sense of inevitability that was paired with a very deep understanding of the market that we're going after. MSPs are part of the broader IT channel, which is $1.3 trillion worth of spend a year. MSPs represent between kind of 350, 400 million or $400 million or $1 billion of that total spend. And so this is a big market, legacy infrastructure with a couple of very big companies that are newer in the category. But this is still an industry that's 50% using cash and check for payments. And so for us, and I love when technology is driving efficiency, giving time back to the practitioners, to the small business owners, to whomever, to do with what they want. And that's exactly what FlexPoint was building. Let's help streamline your payments. Let's help migrate everyone from check is in the mail or cash payments to online payments. And let's give you a better sense of who owes you what money. Because, having sold into SMBs, both at Point and Legion, I know the pains very intimately of what a store owner, a manager goes through. And so that definitely resonated, coupled with the kind of embedded fintech piece as part of an overall SaaS solution. And so working with Victor and Sam, getting to know them and their deep understanding of the market and the problem that they were facing, a very, very rigorous kind of thought process on plan and what they wanted to achieve over the coming years made it for us a absolute, we have to back this company because it's a sneaky big market that is going through a lot of change right now, and everyone is looking for a better solution. And you think about, okay, where are these communities gathering? We think about communities all the time, customer communities. How do you go after communities? And even when we met, back in December of last year, these guys were already in the Reddit forums, just understanding the market and then reaching out to people over Reddit, which we loved. It was like, that most people would have never thought of that as a way to acquire customers. And these guys are on top of it and building and kind of grinding out customer conversations, just again, for them understand this magnitude of the opportunity and what they wanted to build. And so it was a combination of amazing team with an earned insight and a grit and a kind of sense of inevitability, coupled with a very large market and a clear pain point, kind of job to be done, problem to be solved, that fit our model of investing that got us so excited. And so we ended up leading their pre-seed round at the end of last year.
Nice. Yeah, no, I mean, it sounds like a massive opportunity. And then additionally, always love hearing how founders are willing to kind of get their hands dirty, do the non-scalable things early
That's
on
right.
to give them the opportunity to become scalable later on down the line.
That's right.
So feel free to send more pre-seeds like FlexPoint my way as well.
Absolutely. We'll find one to do together soon enough.
There we go. And then, how do you guys decide on a decision internally at Garuda? Is it, you and ARPA need consensus? Is it, more individual GP, conviction? What's the process for internally to get to yes beyond, you liking a company?
Yeah, absolutely. So we're kind of unanimous as a firm. We with just the two of us, and so we want to force the other person to educate us, the other GP, on the opportunity, on the market, on the why. And generally speaking, that's one of the benefits of, again, the two of us and our varied backgrounds. I come from a kind of fintech SaaS background, ARPA, obviously security infrastructure, also has a deep understanding of the SaaS side. And so, for us, that's such the fun part about building the firm, is we both get to learn together as well. And so, we don't have kind of leads or anything like that. We have kind of the point person who is on the opportunity, but founders, when they partner with us, get both GPs. And that's one of the things that, we like to bring to bear is it's the full kind of Garuda team, with obviously someone who's going to be the primary and the other in the supporting role. But we work together on opportunities. We've got obviously very and different networks that we call upon for diligence, for insight, for feedback, for learning. But we're very much a kind of let's do the work. Let's teach the other, if it's a new category, a new opportunity, what we've been reading, so we can all level up in our understanding. And then it's a constant kind of conversation. We joke, we talk to each other more than we talk to our spouses, and because we're just constantly texting, email, calls, and kind of try and structure our day in a way that allows for that, in order to, again, as I mentioned, kind of move quickly with founders that we meet, as opposed to waiting for next week Monday meeting. Oh wait, it's canceled because of the long weekend, or labor, whatever. Okay, wait for another, like things like that. Again, having seen, it's like, okay, let's go quickly and let's move fast and get everybody up to speed.
Yeah, I think speed is a great tool in the venture investors toolkit, and oftentimes that first term sheet that gets put on a company is the one that wins. And I think
That's right.
Founders recognize and respect the investor that gets their vision faster than others.
Yeah. I mean, differentiation so often is just about getting to yes fastest, and I think that's one of those things that, again, we want to make fully informed decisions, full body investment decisions, get to conviction. But once you're there, let's move quickly.
Yeah. The Canvas story, the story was a great one. The Flex Point one's another, awesome story to hear about how the early indications have led you to kind of say yes. But, a lot of companies, not just every company, honestly, has failures and setbacks. So could you share a particular, investment story where it seemed that the company might be down the path of shutting down, going to zero, not particularly attractive investment, and then for some reason or other, whether it was in their control or not, turn the corner and has seen brighter days. And so it'd be great to kind of just hear one of those stories as well.
Yeah, I'll be honest and say that I haven't been doing it long enough to have a story where we've seen kind of through the J curve. We've definitely got companies that we've invested in that, for whatever reason, market, execution, customer problem not real enough, that have ultimately not made it, and have either shut down or returned some money to investors, and founders have moved on to the next. But have yet to have the experience of on the precipice of not working out, and then turned into something great. But we'll do this hopefully before another 13 years passes, and we'll have some of those stories for you.
There you go. Part two of
Exactly.
this podcast will be focused on that sort of TBD on who the name will be. But
That's right.
Garuda is a new venture fund, but you yourself are not new to venture investing, whether it's from scale or matrix, or even as an operator continuing to invest on the personal front. But how has your investment philosophy evolved or changed since day one, Sand Hill Road, from the scale days to today at Garuda?
Yeah, look, I think I try to almost simplify things. As I think when you and I first got into this business, it was there was so much that we were trying to figure out, and so you're just ultimately trying to get to a place where, okay, what other information can I take in? How can I do more work? How can I get to just turn another rock over to get to conviction? I think it's taking the best of what I've experienced at scale, at Matrix, as a quasi angel, and as an operator, and trying to distill that down. And ultimately, I think it comes down, investing decisions and investing comes down to great teams, and definition of great matters there. So the word is doing a lot of work and lifting and heavy lift in that sense. Great teams with, for us anyway, and for me, an insights or a learning or some kind of big glaring why. And so we try and dig at the why a lot, because ultimately founders that we are partnering with are signing up for decade plus long journeys, and that takes a lot of risk tolerance that most people don't have when you actually get down to it. And so we dig at the why and try and pick at that a variety of different ways. But great team with a clearly defined why and a vision, and a vision for the future that now they're trying to pull into the present, that we can then partner with them on and guide along the way. And that's, for us, is like, okay, do we believe in that vision, and do we agree? And if yes, okay, great. And if you've got the other two things, then it's probably going to make sense. Market is probably the fourth thing we think about. But again, having seen markets expand, markets evolve, markets change over time, maybe less critical. But those first three are kind of the things that, at least in my kind of 13, 14 years working with early stage tech companies, I've boiled down to, in terms of things that we try and look at.
Yeah, and I think simplifying the diligence process is super important, because I think we do tend to overthink things, and it's an easy way, unfortunately, to miss out on great opportunities. You overthink.
Yeah,
try to find a reason to say no for no.
There are going to be infinite reasons to say no to a startup, for sure. And so it's like, how do you get at the core question? And I learned this from you and other GP friends of mine who are emerging managers. Like, okay, like, how do you get to the core questions that need to get answered? And what are those questions? And if you can get to those 2, 3, 4 questions, and then once you answer them, and if the answers are satisfactory, it makes life easier, because then you can invest. Great. Now the work becomes, how do you get to those questions? Because you can ask yourself endless questions about an opportunity. But most of it is noise as opposed to signal.
Yeah. I think also like as you mentioned before, spending time in roughly space that you have some context in allows you to kind of drill into the right questions as fast as possible to help solve that speed component you mentioned. And obviously B2B focus, which is November of 2023. So we'll timestamp this as AI being a hot topic for at least now. We'll see how long it continues to go through. Is that an area of focus for you? I could see it having implications one on the SaaS side, where sounds like you spend more of your time, as well on the infrastructure side, as where Arpit sounds like he spends a bunch of time. And so curious to say, are you actively looking for things particularly that are laser focused around AI, and if so, what do you want to see? What do you want to avoid?
Yeah, we're not looking for things that are AI for AI's sake. For us, it's what are the jobs to be done? I think Sarah Tavel at Benchmark had a great post about like jobs to be done. For like what problem is being solved that you are solving, and can AI and an application of AI help solve that problem better, faster? Ultimately, who is the user? And I try and get into this with the founders that we partner with. Like, okay, who's the person you're going after in terms of the user of your product? What problem do they have? How are they solving this problem today? And how are you going to be a better solve for that problem? And then the question that I think most people conflate with the user is, who's the buyer? Like, okay, an analyst who's doing a whole bunch of data crunching. That's the user of the product. That person doesn't have budget. Who's the budget owner? And are those two things the same? Because guess what? The budget owner most often looks at the analyst as the solve to the problem, and as opposed to having the problem herself. And so it's like, okay, who's got the budget for this product, and does that make sense? And so look, I think AI and all of the things that have happened over the last 12, 18 months in terms of just the advancements of technology have been great. I actually think that service-oriented businesses are going to be the ones that benefit the most in the early days, because now you can just drive so much more efficiency within your own infrastructure and your own company that allows you to either service more customers or lower your costs in order to drive your bottom line. But so for us, it's in the context of AI, particularly at the application layers, okay, how is it helping solve the problem that you and your company is setting out to solve? At the infrastructure level, and the tooling side and the like, yes, now it's okay, how does this fit in the broader macro trend of where the world is going? What is your experience in the category? Are you brand new to the category, or have you been working in and around machine learning and artificial intelligence for the better part of the last decade? Things like that, just to understand, again, is this okay, I have a new idea now because this is the hot thing, or I have a burning need, there's a burning insight that I've got that can now be solved, and trying to kind of separate the two. Not to say that either is right or wrong, but for us, we very much lean towards the latter as opposed to the former.
Yeah. No, I think the point around the optimization around service business is an interesting one, because I think for so long in the venture, because we looked at tech-enabled services businesses, and one of the knocks has always been around just like the economics of those models are really hard to
capacity to scale,
worth, right? And so if AI or other software tools can make that more efficient, perhaps those opportunities become more relevant and more exciting for us as a venture investor.
Yeah. I think that's totally right. And look, even bringing some of these capabilities internally to us as firms, and using some of these tools to streamline processes, to accelerate kind of documentation, things of that sort. Things that we would do otherwise manually. I think hopefully helps make us as emerging funds more able to punch above our weight and spend time focusing on the things that we are uniquely capable at doing.
Yeah. And maybe thinking more, longer term for Garuda, what is the long-term vision for Garuda? What do you want it to be 15 years from now when you have more gray hair?
Yeah, exactly. It'll be lots more salt, a lot less pepper. Look, we love the craft of venture and partnering with founders and working with them as they turn their ideas into products, into companies. So the early stage is where we plan to stay. And as we look out to subsequent funds, we plan on scaling up as needed to continue to back founders with the adequate amount of capital that they require to get going. But we recognize that we have to earn that right. And so it's all about putting in the time to lay the foundation for the firm. And we are very much building for the long term, and hopefully can make this the last kind of job we have, because as I mentioned at the top, it's just I love doing it, and I get immense joy from being close to founders. And so I don't think we have any aspiration of having massive teams and people around the world or anything like that. That now you create a big multi-stage firm. That's not who we are. We want to stay boutique, build out the practice of venture, and not have so much separation between us and the founders that we back, because I think in especially early on, the context matters and the relationship matters, and knowing who you can call matters. And I think that again helps serve to differentiate firms like ours from other bigger, kind of more established multi-stage funds.
Yeah, that makes sense there, and I think something we can all aspire to be as well in the venture world. And then more specifically, I guess to you, Rishi, relationships are so important within venture, and you do a great job maintaining them. Obviously, we've known each other for 13 years plus now, and so what do you do to enable yourself to kind of maintain relationships, but not like necessarily loose or weak ones, but ones that folks can seem as strong, tangible, even if it's been a while since you last connected?
Yeah, I think it starts with caring. I care very deeply about the people that are around me, whether strong or loose ties, because in some way, shape, or form, that individual has changed me. And I've been able to take from them and learn from them. I firmly believe you can learn from anybody you meet. And so, I try to do a good job of just also documenting things that I learn, and again, just trying to be thoughtful about who the individual is and what they might be going through, and then being proactive about reaching out. I think birthdays are a great way to just reach out at least once a year and say, happy birthday, I'm thinking about you, which I think, you don't get as often, especially as time goes on and whatnot. Holiday cards are another great one, right? It's you see someone, you care about them, you send them a holiday card, say how they're doing. And so I think it's about just, if you can remember and note down, I'm not going to pretend like I have thousands of people and all of their individual information in my head. I've got the doc on people, and I kind of try to write down things that are important: kids' names, spouses' names, and the like, important dates. And if I can just proactively touch somebody, once every quarter, once every 6 months, once every year, it depends on who you are and how loose the connection, then great. And hopefully, again, that gets back to the just building trust, and maintaining the relationship in a way that is intentional. And I think that for me, it's about being intentional and making it a priority for what I do.
Yeah. And I think this next question actually kind of ties into your relationship maintenance and building stats. And so I know that your wife's friends affectionately call you Sir Text a lot. And so, one, could you share the story behind this playful nickname, and what founders and investors should take away from this playful, or maybe not so playful nickname, depending the time of day you're texting?
Yeah, no, absolutely. So then I got the nickname from my wife's girlfriends when we were in college. We were college sweethearts. We met. I was a senior; she was a sophomore, and so this is 2007. And so we met, and I, growing up in Asia, would text message. And the reason for that, and this is like T9 phones on the old Nokia bricks, like you remember. And the reason for that is, in Jakarta and in Indonesia, texts were free. Minutes dialing costs money. And so, of course, we're optimizing for lowest cost. And so text was always my natural default. And I remember for the first time when I moved to the US in 2004, I walked into a Singular store to get my cell phone number and plan. They're like, "Oh, would you like to add text message?" I was like, "What do you mean add text messages?" Because that was not the case in the US. So we meet, it's 2007 at a football game. And then she leaves at halftime, but I had gotten her number. And then I went to Northwestern undergrad. We were getting smoked at half. We came back and won in overtime. And so I texted her, you missed a great game. And so that's how then she had my number and we started messaging each other. And that was just my default text. And so I would text, and like, as I find out later, she had her and then all of her girlfriends around, like, what do we say? How do we respond? Because that was not the default name. But so I got the nickname, so her texts a lot from her girlfriends, which I'm proud to say still have. But now everyone's caught up and in fact moved on from texting to IG DMs and whatever else the kids use these days that I'm definitely not cool enough to know. But I think what founders should expect is again, as a result of that, I try to be available, and I will most likely respond to your text message very, very fast. And so that's all of my friends, and you included, know that's the fastest way to get me is shoot me a text message.
Indeed. No, great story on how you guys first started texting. And then, I think being available for people is super important. Text is a great way to do it. And yes, I do remember those old phones where you had to push 3 times to type in C. Like, it took a lot longer to text back in the day than it does today.
Yes. One thing I have not gotten into that I learned while I was traveling to Brazil a lot for work when I was at Point is the voice note, like the leaving the voice note back and forth. Like that I never picked that up. And then a bunch of Brazilian friends leave me voice notes. I don't know what to do with this.
I know. I got to push play for a message. What? Yeah.
That's right. Yeah. What? And I hold it up to my ear and then I'm talking back. Yeah, exactly.
It made me just, lastly here, just to kind of end on another kind of fun note, you mentioned at the very beginning here, the name origin around Garuda, it obviously is a reference to an eagle there. Your favorite NFL team also happens to be the Eagles. Maybe that's not a coincidence, as I thought it was beforehand, but they look particularly good this year, man. You had a big win yesterday in overtime. Is your squad going to finally win the Super Bowl again? What do you think?
Oh, I hope. It's always the hope for any team to make it to the championship. We're looking good. It's not the prettiest football that I've watched them play, and we've got to gut out a bunch of wins. But I think Jalen Hurts said, these are the character building wins, and so I'm hoping that the team can take that momentum through the rest of the season into the playoffs, because it'd be great to get back to the Super Bowl again in a subsequent year, and hopefully this time win it. But fingers crossed. But I will, as an Eagles fan for too long, I will never say it's a sure thing, because you never know.
No, I definitely understand that. I think I remember us going to a NFC Championship game many moons ago too, and
moons ago.
Got to watch the Giants beat the Niners, so that was nice.
Yes,
but
that was a great season.
I think the Eagles have a good shot, as long as the NFL doesn't ban that tush push. You guys got a good shot at winning it.
Exactly. Fingers crossed.
Well, Rishi, thanks again so much. It's been great kind of hearing the founding story of Garuda, how you support founders and what folks should expect from you. And so thank you again for the time, Rishi.
No, thank you, Richard. Great to see you, sir.